then the last topic, Masala Bonds, which is a very important topic. Already UPSC asked a question. I already discussed about this concept of currency risk. And I shown you what is this currency risk also in relation to importer. What is this currency risk? If the price fluctuates in relation to if the dollar value, rupee value changes, there is a risk associated with it. Yes or no? If the dollar rupee value changes, there is a risk associated with it. So that is what is called as currency risk. Okay. So first I will explain what is this again, this currency risk, and we will see that what is happening in relation to external commercial borrowing, and then we will go to Masala Bonds. Okay. So I will explain you the private sector. Okay. Try to understand that government is now not borrowing outside the country. The government, the central government is now not borrowing. Earlier, it used to borrow outside the country. That is, external borrowing used to be done by the central government earlier. Now the central government prefer the domestic market because we have a vibrant and liquid domestic government securities market. So the government don't require, no need for the government to raise fund outside the country. So since the central government is borrowing huge from the domestic market, there is less money to lend to the private sector, or the private sector has less money from the domestic market. So what the private sector will do? They will raise money from the external market. What is external market? Market outside the country. They will raise money from the London Stock Exchange, Tokyo Stock Exchange, New York Stock Exchange, etc. or from any international stock exchange, Dubai, etc. Okay. Now, so one method of private sector borrowing is external commercial borrowing. It is basically a bank loan. External commercial borrowing is what? It's basically a bank loan. But what type of bank loan? Loan taken from outside the country. So one of the problem of this external commercial borrowing is it is having currency risk. What it is? It is having currency risk. Imagine a private company. Imagine a private company have taken a loan of $1 lakh. It has taken a loan of $1 lakh. Imagine it has taken a loan in 2017. When it has taken the loan, $1 lakh loan, the Indian rupee was rupees 62. In 2017, when a private company taken loan outside the country, 1 lakh, so it means that how much money it has raised? 62 lakh, yes or no? Yes or no? And it is paying interest as well as principal, okay. And it was having a tenure of 3 years. So in 2020, it has to pay back. It has to pay back how much? $1 lakh. But now in 2020, rupees $1 is 72. So it has to pay back how much? 72 lakh. So there is a risk is there. So what the private sector should have done? It should have gone for forward contract. A hedging should have been done. But most of the private companies in India are not going for hedging, are not going for any derivative contract. So there is a high risk of defaulting because of this currency risk. So why these is a risk is that because it is dollar denominated. The borrowing is in dollar denominated. So you understood the problem of currency risk. Okay. So to avoid such type of external commercial, and most of the and see, this is I am telling about external commercial borrowing, basically our bank loan. Now another option is there. Taking bonds. Private sector can go to London Stock Exchange and raise money by issuing corporate bonds. Now the question is that again, most of the bonds or the money which they raise from the foreign capital market is denominated in dollar. So if the bonds are denominated in dollar, always there will be currency risk. So in order to avoid this dollar denominated currency risk, the government as well as World Bank have started supporting a country specific currency bonds. Country specific currency bonds. For example, Chinese yuan bonds. That is Chinese currency bonds. Indian rupee bonds. Indian specific bonds. So like that each country's bonds. So when you are issuing your own, if you are issuing bonds in your own rupee, the currency risk will be lesser. I'll give you example. Okay. So we'll see that. So this is what is called as dollar denominator. It is dollar denominator. So in dollar denominated, currency risk is with whom? Currency risk is with the issuer, the private company. Okay, we'll see that. Okay. So we've seen that I'm comparing dollar denominated bonds. I'm giving an example of, this is very, very important. Dollar denominated bonds. This is the last topic also. We are winding up. Dollar denominated bonds and rupee denominated bonds. Dollar denominated. So we will see the difference between dollar denominated and rupee denominated bonds. Okay. So in dollar denominated bonds, if $1 lakh is being raised. So this is a bond. $1 lakh has been raised for 5 years. So after 5 years, you have to pay regular interest. You have to pay regularly. After 5 years, you have to pay back this $1 lakh. That too in which currency? In dollar itself. So what happened is that here when the rupee is 62, here when the rupee is 72, you are at a loss. The risk is for the issuer. Okay, you have to convert, so you have to pay high money to get $1 lakh. So dollar denominated bonds are having greater currency risk with the issuer. Now we'll see the difference in the case of rupee denominated bonds. Now here again same cases. In the case of, okay, again in rupee denominated bonds, okay, try to understand that in rupee denominated bonds, short form I am writing, again he is raising, see imagine, okay, this is I am talking about 2017. In 2017, he has raised $1 lakh. But interesting thing is that even though he has done through get money of $1 lakh, what will happen is on the day when he raises the money, it will be converted into rupee. So here it is 62 rupees. You get the point? So it will be counted as that this borrower has raised 62 lakh only, not $1 lakh. In rupee denominated bond, even though foreign currency is been taken, but the value will be denominated in rupee. Here the value is denominated in dollar. Here, see, imagine in London, can you denominated anything in, can you raise Indian rupee? No, you have to raise dollar, but convert it into Indian rupee. So in this case, in dollar denominated, you will be mentioning in dollar, denomination will be in dollar. In rupee denominated, you will mention that, so you have raised only 62 lakh. So after 5 years, you have to pay only 62 lakh. So whatever happens to rupee and dollar will not, you have to pay interest. That is different, common thing. You have to pay interest. How much is mentioned? If it is 8% interest, you have to pay 8% interest annually. So here my question is, in rupee denominated bond, who is having currency risk? Investor. Investor who purchased your bonds is having the currency risk. Issuer don't have. Issuer means the private company who raised fund, they don't have any currency risk. Now what will happen to poor investor? If the Indian rupee have happened like this, will he get, see, now imagine, he has given $1 lakh. Investor have given $1 lakh. And the private company got 62 lakh. Now after 5 years, the investor, this private company is giving back 62 lakh. And what the investor will do? He is converting the 62 lakh into dollar. Will he get 1 lakh dollar back? No. Because now Indian rupee, 72 rupee is $1. So he may get 90,000, something like that. So he is at a loss. So that's the reason why in rupee denominated bond, investor is having the currency risk. Rupee denominated. Now tell me that which one the government and RBI will prefer? Rupee denominated or dollar denominated? RBI and government will prefer rupee denominated bonds. And Masala Bond, why Masala Bond is very important is, Masala Bond is a rupee denominated bond. Masala Bond is a rupee denominated bond. And World Bank, as part of funding India's infrastructure projects, you know infrastructure projects, no? Infrastructure projects requires huge fund, and that too for a long term nature. You know the specialty of a bond. Bond can raise for a long term. Okay, so the key point about Masala Bond is that it is rupee denominated, and thereby currency risk is not with the company which raises fund. Currency risk is with the investors, the Indian government, and the RBI is not worried. But we were worried because earlier private companies used to raise fund through dollar denominated bond as well as external commercial borrowing. Both are dollar denominated and both is having currency risk. Because of that, there is a chance of default, and which may affect, even if a private company default, it will have a wrong message about Indian companies. Okay, so that key point you keep in mind. This word of currency risk with whom can trap you. So be very clear with it. Okay, so why it is in news is that already see, London Stock Exchange is the major place where Masala bonds are issued. What is Masala bond? Rupee. Now why? Who has given the name Masala Bond? It is the private lending arm of the World Bank. Which is the private lending arm of the World Bank? IFC, International Financial Corporation. IFC is the private lending arm of the World Bank. So International Financial Corporation have given this nomenclature for this rupee denominated bond called as Masala. Why? Because Indian cuisine, Indian culture. So like that, Chinese culture, they have given Chinese name. Japanese culture, they have given, Japanese are famous for samurai. So if it is Japanese denominated, currency denominated bond, it is called as samurai bonds. Chinese, it is called as dim sum bonds. It is there related with their culture. So IFC is giving different nomenclature. It is there in the material. Please refer it. It's there in that box has been. All are their respective currency denominated bond, and the name nomenclature. The name is given by the International Financial Corporation, which is the lending arm of the World Bank. Okay, private lending arm of the World Bank. Okay. Now regarding Masala Bond, first thing is that it is rupee denominated bond or rupee denominated borrowing. Who borrows money in rupee? It is Indian entities. Indian entities only can borrow using Masala Bond. Okay, and where? Inside the country or outside the country? Outside the country. Okay, be careful. These are the keywords. Okay. Now regarding, see, IFC was the first to issue rupee denominated bond, 1000 crore 2-3 years back, and given the nomenclature. And try to understand that the company which in London, I told you, in London Stock Exchange is having a vibrant Masala bond market. Reason being, there is in London market you can raise fund, and plus these bonds are listed in the London Stock Exchange. These bonds are listed in the London Stock. So what is the advantage? There is liquidity is there. Same concept. If anything is listed in a stock exchange, you can sell it at any time. Why? It is listed liquid if there is a buyer. Okay. So I told you that why it is called Masala Bond, because Indian culture and cuisine has been given. Okay, and in India presently, Masala bonds are issued to foreign investors, not to Indians. And that too in which currency? US dollar. It's a key point to be noted down. Okay. And see, this is another point. Currency risk in relation to Masala Bond lies with the investor, not with the issuer, and not the issuer. Unlike external commercial borrowing. Very, very, very important point. no doubt. So the 3 points are rupee denominated bond, currency risk, and it is settled in US dollars. Okay. Now, why it is in news is, now London Stock Exchange is having and National Stock Exchange is exploring the possibility of dual listing of Masala Bond. What do you mean by dual listing? Very simple. Dual listing means listing in two stock exchange, but in two different countries, not in the same country. See, a shares can be listed in, it's also Reliance. Reliance is listed in National Stock Exchange as well as in Bombay Stock Exchange. That we will not call it as dual listing. Dual listing means listing in two different countries. So now this Masala Bond, which is already listed in London Stock Exchange, the National Stock Exchange is in talks with the London Stock Exchange whether it is possible to list the same bond in National Stock Exchange also. What is the advantage is that then there will be more liquidity will be there. Okay, so that's talk is going on. That's why this Masala Bond have become very important. So dual listing means a process by which a company will be listed on stock exchange of two different countries. It can be anything. That listing can be for shares, etc., or for bonds also. So what is the advantage of dual listing? One is additional liquidity. You can raise additional liquidity, increase access to capital, and another thing is that trading will happen for a longer period. You can see that London and Indian time there is a 5.5 hours time gap is there. So presently, if you see that Bombay Stock Exchange or National Stock Exchange, their trading hours is limited. Now, when Indian Stock Exchange trading closes, trading will be happening in London Stock Exchange. So the trading hours will be more. So these are the advantages of dual listing. So it's still dual listing have not happened, but talks are going on. Okay. So because of that, this concept have become important for you. And this was the question. You will answer it and we will wind up for today's session. Okay. It was asked in 2016 with reference to IFC Masala bonds, sometimes seen in the news. Which of the statement is correct? So are all correct. International Finance Corporation, which offers these bonds, is an arm of the World Bank. Is it correct? It's a correct statement. They are rupee denominated bonds. Is it a correct statement? Yes. And are a source of debt financing. Is it debt financing? Yes, bonds are debt financing. They are not equity financing. And are raised by the public as well as private sector. Okay, you have seen that HDFC, many private companies going to London and raising Masala bonds, as well as public sector enterprises like NTPC. So even public sector enterprises also is raising fund through issuing Masala bonds. So it's a correct statement. Their keyword are rupee denominated bond. Obviously, if it is a bond, it is for debt financing. In India, it is used both by private sector as well as public sector enterprises. So both the statement are correct. So answer will come as C, both 1 and 2. Okay. So go and read the material. You will understand, and please read the newspaper articles which I told you shared today.